Ladies and gentlemen, good day and welcome to RIR Power Electronics Limited Q4 and FY26 earnings conference call hosted by Veritas Reputation PR Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there'll be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Sawant from Veritas Reputation. Thank you, and over to you, sir.
Yes, thank you, Neerav, and good morning, everyone. On behalf of RIR Power Electronics, I extend a warm welcome to all participants joining us today for the Q4 FY26 earnings conference call. We appreciate your time and interest in joining us today to discuss the company's performance for the quarter ended March 31st, 2026. We truly value your continued interest and support. As you are aware, the financial results for Q4 FY26 have already been disclosed to the stock exchanges and are also available on our website. Accordingly, today's session is designed to provide deeper insights into our business strategy, operational progress, industry outlook, and the company's long-term value creation journey. Following the opening remarks by our management, we will then open the floor for a quick Q&A session. Kindly keep your questions concise and relevant to allow broader participation. Before we begin, I would like to remind you that some of the statements made today's discussion may be forward-looking in nature. They are based on the company's current expectation and are subject to various risks and uncertainties that could cause actual results and outcomes to differ materially. Joining us on the call today are Mr. Harshad Mehta, Non-Executive Chairman, Mr. N. Ramesh Kumar, Managing Director and Chief Executive Officer, and Mr. Ankit Shah, Financial Controller. With that, I would now like to hand over the call to our Managing Director and Chief Executive Officer, Mr. N. Ramesh Kumar, for the update on financial performance and overview. I would like to clarify that we are discussing historical numbers. Please do note that anything said on this call that reflects the outlook towards the future could be construed as a forward-looking statement. Having said that, now we would like to take you through the Q4 results numbers and the full year's performance. Over to you, sir.
Thank you, Abhishek. Good morning to everyone. Once again, I thank you all for joining us today for RIR Power Electronics Q4 FY26 earnings call. My name is Ramesh Kumar. I am MD and CEO, and it is my pleasure to walk you through the company's performance for the quarter ended March 31st, 2026, followed by key operational updates. Audited standalone Q4 results, the total revenue from the operations stood at 23.95 crores, with a growth of 18.16% over Q3 of FY26. And degrowth of 9.5% mainly due to large one-time order worth 3.3 crores executed in March 2025. EBITDA for the quarter came in at 2.09 crores. Consequently, profit after tax stood at 1.39 crores. Earnings per share for the quarter stood at 0.17 per share. With respect to standalone FY26 results, the total revenue from operations stood at 90.87 crores, which was up by 5.41% over FY25. EBITDA for the year came in at 10.21 crores. Consequently, profit after tax stood at 6.72 crores. Earnings per share for the year stood at 0.86 per share. The order intake during the year FY26 stood at 90.2 crore, with the closing order backlog of 17.4 crores at the end of the year. 20% of the orders received from overseas customers during the year FY26. In terms of operations, we continue to make steady progress across our key initiatives. With respect to our upcoming facility in Odisha, project is in two phases. Phase 1 consists of epitaxy and packaging. Phase 2 is fabrication. The clean room construction is completed for epitaxy. Currently, the plant and machinery installation is under progress and estimated to be completed by July end, by which time the power supply is also expected to be available. We expect to commence epitaxy operations in second quarter of FY27. With respect to revenue from Odisha plant, we will be selling AP wafers to fabricators outside India and also getting SiC devices. Manufacturing will be outsourced for our with our wafers for validation and revenue generation in FY27, reinforcing the company's commitment to Make in India initiative and strengthening the country's advanced manufacturing ecosystem. Further, we have won our first overseas order securing contract to supply 5 kV silicon control rectifier thyristor. The order will be executed in phased manner with completion expected by end of 2026. The contract involves the supply of 120 numbers, 125 mm press pack SCR devices designed for high power and high current application. On the innovation, the R&D front, recently we have announced a major milestone with the development of 25 kV, 120 kiloamps capacitor discharge semiconductor switch, strengthening India's high power electronics capability. We have also expected our portfolio with new Silicon Carbide MOSFETs and MPS diodes, enhancing efficiency, reliability and performance for key industrial sectors including EVs, industrial system and energy infrastructure. We will be investing approximately 5 crore out of internal accrual for upgrading of facility to meet the customer expectations on growing high power devices, demand and testing facility for defense development in development orders in Halol. Further, the NSE approval for listing of the company shares on National Stock Exchange is under process. The relevant clarifications have been responded and we expect the approval to come in due course. So I thank you, each one of you, for joining the earnings call, and we will now be happy to answer your questions and hear your perspective. And also I request Harshad Bhai, in case if he wants to add some more points. Thank you.
Thank you very much, Rameshji. Good morning, everyone, and thank you for your time to join us. As you are hearing Ramesh Kumarji first time as MD and CEO of RIR, you can see the difference. And what I have noticed for last 2-3 years, that you have seen the difference in terms of visibility to manage the growth as well as company efficiency, operations in every which way. And I thank you, Rameshji, for your support as well as all your capabilities to the benefit of RIR and their shareholders. Power electronics, semiconductors have been talked about in India for last 5 to 6 years in a major features and everything else. I always have reflected my view since 2005 that power electronics is the lowest hanging fruit for Indian economy as well as in the Indian industry. And I still believe that very firmly. And that's why where we are is we are trying to strengthen our fundamentals by bringing such a talent like Ramesh Kumarji to manage our growth and properly manage our growth so that we can continue to leverage and monetize our technical expertise for years. Many times, I think you may have heard me saying, we are at the cusp, we are at the very good time, and some people may say RIR is lucky, but in my opinion, luck is nothing but when the preparation meets opportunity. We have been preparing for this opportunity for last 20 years in terms of high power semiconductors, high power electronics, and high power electronics is like heart of the system, which may not contribute value in terms of the overall system significantly, maybe 15-20%, but it is the heart. And without heart, we cannot function. In the same way, our semiconductors, power electronics plays an important role. I'm sure you all have heard AI, data center, 5G. All of these things are now require the power reliability to be at the highest level so that the data centers can perform to their full potential in terms of speed, density, and performance and reliability. And I'm not so sure if you heard the U.S. news. Data centers in some Midwest cities, they put in 10,000 diesel power generators to support the reliability of data centers. 10,000 diesel generators. And the whole town was suffering, is still suffering from asthma and breathing-related illnesses. So the only solution, as I see, to accommodate or enable the high technologies that we all see and we will face and use is improvement at tremendous power dying, meaning tremendous change of structure in power. Today, power is supplied by 1970s technology and is used by consumer, including commercial, industrial, and everyone else, which we rely on 2020 plus or almost sometimes 2026 plus technologies. Power electronics is a bridge that will enable the power, which is right now generated with 70s technology, will enable that power to be adequately supplied to the loads that require the reliability and performance. So we are focusing our growth sectors, as you can see, our focus Make in India, self-reliant India. For railway components that no one is making in India. Defense, high power, Ramesh mentioned a couple of examples for high power applications. That's the very first application successfully tested for last year and a half. Mr. Prasi deserves all the credit for it. And we replaced ABB, who was the key supplier for India defense. And RIR would become one of the domestic supplier as a self-reliant India. In addition to that, we also see grid and railways. All of these are major infrastructure, and power electronics is the heart of all of these things yet to come over the next 20 years. So I remain very confident in terms of growth of RIR. We have not seen the decades, what we are about to see now and next decade in terms of the growth of the product that we make and all of the new players that you see. RIR is second to none in terms of how we support industrial infrastructure, as we mentioned, in terms of railways, grid, defense, renewables, and so forth. So again, I appreciate your confidence, I appreciate your interest, and I appreciate your time. And we are here to answer any questions that you may have.
Thank you very much. We'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Subramanian from Arihant Capital. Please go ahead.
Good morning, sir. Thank you so much for the opportunity.
Sir, sorry to interrupt. Can you speak louder, please?
Currently, I'm audible, sir?
Yes, thank you.
Yeah. Good morning, sir. Thank you so much for the opportunity. So could you please talk about our capital allocation over the next few years? I think we have done phase one capex around 225 crore. I think it's 50/50 with ours and Odisha government. And what are the clawback or ownership terms if milestones are missed? And secondly, in phase two capex, how we are going to implement it? I think we are talking about some 90 crore revenue from 400 crore plus once the phase one and phase two completed. So I just want to understand how we are going to allocate our capital and how we are going to take it forward.
Ankit, can you answer this question?
Yeah, sure.
Ankit? Yes.
Yeah, am I audible?
Yes.
Yes, sir. So the total capex for the project is around 618 odd crores, and out of which we have undertaken a capex of almost around 120 crores, out of which 50% has been provided by the government of Odisha. So the remaining 500 crores is yet to be undertaken, out of which 100 crores pertains to the first phase and 400 crores pertains to the second phase for fabrication. And wherein for the entire 500 crores, we expect 50% subsidy to come in from the government of Odisha.
So when the
This call is now being recorded.
So when the capex will be completed, sir, and what's the asset turnover we can expect?
So we expect the entire capex to be undertaken by December of 27 or March 28. That is the timeline we are looking at.
And the asset turn, sir? I think we are spending 600 crore. It means less than 1x.
Can you repeat that?
No, so what is the asset turnover in this business, sir? I think we are doing 618 crore.
Globally, the asset turnover ratio for the companies in this industry ranges from around 0.5 to 0.75x of the gross assets. And we also expect to be in the same range, somewhere around 0.65x of our total assets.
Okay, sir. So my next question, I think we have replaced ABB in defense and railway applications for high power switches. I think like if you compare to our global players like Infineon, Mitsubishi or emerging Chinese suppliers, what is our technical moat in terms of wafer design, packaging or application know-how, and how your product or patents and the key talents? Why I'm asking this, because after some point of time, this product might go to commoditizations. So I just want to understand how we are in terms of better compared to our competitors and how we can improve our margins.
Maybe Harsha sir can.
Yeah, I can certainly give you my view. So RIR, those, it may seem like a small player and a newest player compared to the competitors that you mentioned, ABB, Siemens. Infineon was split into, Siemens was split into Infineon and Siemens, Mitsubishi, Toshiba, Hitachi. In late 80s, there were two US companies that you don't hear about it anymore. And those two companies in power electronics were GE and Westinghouse. And Westinghouse sold most of their assets to ABB. And Silicon Power, meaning my first company, we bought GE's high power semiconductor operation in Melbourne, Pennsylvania. And that's what it was shifted in 2005 to Halol, because I felt in mid-2000 there was tremendous outsourcing activity going on globally. And I felt there is a tremendous intellectual leveraging in India, being from India, and I felt we can do much better. And thank you to the team I think we have proved that we can. We have been doing it on an average for last 20 years. We have been spending about 10% minimum in terms of advanced technology that relates to all the key value chain of power electronics in terms of device design, in terms of packaging, in terms of control, in terms of reliability, as well as how to apply with the value addition this high power devices that can provide reliably and effectively specialize in the marketplace. Now, I give an example. In 2015, Novartis in Shanghai was having a lot of problems with the power issues in their R&D campus in Shanghai. And at that point, they went the global tendering with ABB, Hitachi, Mitsubishi, and Siemens, and Silicon Power, which is my company. Silicon Power won that bid against all the competitors because of our second to none in technology and our ability to deliver much more high performance, much more competitive compared to other big companies. And we delivered the system and it's still operating. It gives you an idea that my vision has not always been commodity products. At some point, most of the components will become commodity. But it is my vision has always been to keep on adding value, to keep on adding vertical integration, provide don't treat customer as a customer vendor, but treat customer as a partner. How can we efficiently help them for them to be more profitable and productive? So I hope I answer your question, but if I miss anything, please let me know.
Yes, sir. So on the margin side, if you could share some light on that. I think you mentioned some 10% kind of range. Is that right way to assume, sir?
Can you please speak a bit louder? I am not able to hear you.
No, sir. Like you mentioned, some 10% kind of range minimum, right? On the margin side?
Yeah.
Okay, sir. Okay.
So Silicon Carbide as a song. So even though it's a commodity product, but we have tried to maintain the quality and reliability compared not only just the cost is a driver, but RIR quality is well recognized globally. And RIR, we have seen when we early on, we would get products from China with RIR logo because the RIR quality was second to none. And we still remain to be in that fashion. We highly do the quality testing. We make sure that no product goes out that doesn't meet customer specs and reliability overall. We feel we are almost, I say that many times and you may have heard about it, but we have capability if we have the right resources and the right strategic partner to be ABB or Hitachi or Siemens of India in terms of our know-how, in terms of our capability, experience, customer visibility, as well as product in high power.
Okay, sir. Sir, my last question, our order book around...
Can we request you to come back in the queue?
Sure. Fine, sir. Thank you. Yeah.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Yogesh Patil, individual investor. Please go ahead.
Thank you very much and good morning, everyone. Sir, if I'm not wrong, correct me, India currently import roughly 3,000 to 4,000 crores of SiC power semiconductors. And what is our break-even, sir? Let's say in FY28, what would be the break-even utilization? And do you see maybe after initial supply, the revenue could be multifold by FY30 kind of number because renewable power and EV is a growing segment. So in terms of what we are doing in terms of customer ties and in any backward integration or maybe tie-ups for raw material securing? Just wanted your views.
So we have looked at, I have looked at all the key value chain issues, and especially in the geopolitical situation and global pandemic. We were forced to look at where the security of the supply chain is required. And we started in Silicon Carbide. We even went one step backward in terms of Silicon Carbide epi. At Halol facility, we buy silicon wafers and use that in the diffusion process as well as packaging and so forth. In Silicon Carbide, because of I see that Silicon Carbide epi will become a key challenging issue in terms of supply chain, especially for medium and high voltage. And the distinction is the thickness of epi for the automotive application is about 10 to 12 micron. And when you go to industrial, defense, and other applications, that can go, the thickness of epi can go as from 50 microns all the way to 200 microns. And that's where our core expertise lie. And both the reactors that we have procured have very good reputation for thicker epi. So we feel that we would be able to, once the epi starts, we should see a good growth in terms of epi. Now, when it comes to fab is a capital intensive as well as long-term investment. Because whether you make process one wafer or you process 100,000 wafers, your maintenance, your manpower is almost fixed cost remain more or less same. Variable costs depend on your volume and so forth. So there is a critical level that you need to get to break even. Till you get to that break even at about 60 or 65% fab capacity, you don't make any money. As a matter of fact, you need to get there to break even. And you lose money till you get there. But once you are above 60% capacity, the margins are 40% plus. Because you have done all the fixed costs and the variable costs are not that high. So the margins go high in terms of capacity utilization goes higher. Okay. And that's what we'll see in Silicon Carbide. And silicon, in my opinion, has 9 lives or more. Silicon Carbide is the next generation substrate. People talk about gallium nitride, diamond, and other things as well. But silicon still has many undefined advantages as well as unutilized advantages. That, first of all, is the most economical. If I look at a system, Silicon Carbide system on an industrial application, we can achieve 95% of the performance in silicon system compared to Silicon Carbide system. And the value is about 20 or 25% of the total. I'm talking about commercial and industrial applications. For military, and as well as national defense and critical applications, 100% performance is required. And we are looking at, we have been doing all the different options in terms of cost benefit analysis from our customer's perspective. When we have existing product or we look at the value addition product or even a new product, we look at that, so how would we justify cost benefit? And in my mind, even though I'm a little bit aggressive, I like to see a return on investment to be no more than 1.5 to 2 years.
Okay. And sir, roughly based on your internal assessment, I'm not asking what is the target and all, because when we are putting this plant, so what would be the market share expectation, let's say in FY 2030? Roughly, I'm not asking a hardcore number. Maybe what is your estimate? Because to be frank, I am new to this industry and sorry for my poor knowledge, but I just want to try to understand what could be the number you're looking and what could be the basically future year.
Yeah. So once you look at the market share in Silicon Carbide arena or silicon arena, it's like as you mentioned, commoditized products, low power, and you see millions of cars on the road, but you don't see as many trucks on the road. So our focus is our expertise, technical expertise in medium and high power. We have been saying all along. And we expect the market share for medium and high power segment on industrial, data center, railways, and so forth. We will at least get probably about 20-25% market share. Overall, globally, when you look at market share, Asia, Europe is 40%, China is about 25% overall, North America is a fraction as well, and India too. So we feel we will capture good market share of medium and high power and the low power sector. We want to make sure that we will serve that market, but with some value-added proposition so that we can compete on a cost basis or competitive basis compared to the product coming from China or the glut that happens in a way unfairly from China with the government subsidies.
Okay. And sir, last question on my side. Do you see the depreciating rupee will be net beneficiary for us because it will directly compete with the import? Correct me if I'm wrong.
Can you please somebody clarify the question? I didn't quite hear it.
No, he says the question is that depreciating rupee will be beneficial or that's what he is asking. I think we are.
I think it would be beneficial because what is going on is we are facing multiple opportunities in terms of low power devices that RIR has been making traditionally. The market is still there globally, but the suppliers are limited outside India. Even India, there are only 2 suppliers, now only 1 RIR. Globally, same thing is happening. So we see growth in our export. And when that happens, obviously the valuation compared to dollar to Indian rupee helps us in terms of margins.
Okay. No, I'm asking you because India is also importing, right? So the competition would be lesser compared to historically because of the rupee depreciation.
No, in medium and high power, what Harshad sir is saying is that medium and high power, there are less players and we will be exporting. We will be, exporting will be more than the import.
Okay.
So at present, we are at the same level. Our total imports and exports matches, so it doesn't give us a big impact on the depreciation of the rupee.
Okay. And sir, last request from my side. Sir, we would be.
Yes, can you just one? I'm just requesting you to please join because the other people are also waiting. If you could just.
I requesting plant visit. I'm done.
Yes, interested in plant visit. Sure. You just get in touch with us. We'll try to organize that.
Sure. Thank you very much and all the best.
Yeah.
Thank you. Next question is from the line of Sandeep Rao from Canara Bank Securities. Please go ahead.
Good afternoon, sir. Regarding sir, last con call, there was a clarity on the electricity line that you are supposed to get for third phase. So whether that has been received?
No, it is not.
It is not received yet, but government of Odisha delegation was in the Bay Area, in Silicon Valley last week. Chief Secretary, Electronics Principal Secretary, as well as other people were there. You must have heard, or you may have read, they signed a $3.3 billion MOU with Intel. And so one of the things where my presentation to the Chief Secretary as well as the Principal Secretary Electronics, so they are expecting us to get the product out, and my request to them was to expedite this 33 kV supply. And so far, I think everyone is committed end of June. Hopefully, it will happen soon.
Sir, but the same thing in the last phone call also, there was expectation that they were supposed to give by March end. And the again, if and you are told at that time that after we get that line, another 90 days we will take for the full line of production to start. So, sir, don't you think that product will get delayed by more and more time? Delay is happening.
Unfortunately, this is, even though we manage power, we don't produce power or we don't transmit or distribute power. This is going on because every time I make any commitment is from Odisha. I do not control the destiny of that. And Odisha government right now, especially the power transmission sector, is about 3 or 4 different agencies involved in it. And the people at the secretary level keep on changing. So especially the grid people, there's a lot of, everyone changed in December. And now there is a Tata Power is a service provider, and they are waiting for procuring transformer and so forth. I know you may think, I am also equally frustrated because I want to see the product out. But my other option is to use the DG sets, which will make it very difficult for us to competitively make the product. And we don't want to show Odisha that we have some other options because it's not viable. And so this is like what we have everything ready. We have showed them, they visited our facility, all of the clean room, all of the equipment that's supposed to come for EPI has been there, and we are waiting for power. So I'm just 2 days ago, I met Chief Secretary and everyone else, and they have promised that they would do their best in terms of keeping June 30th deadline.
Just to add on,
yes, sir.
Just to add on to what Harshal sir is saying is that you know that today transformer supplies have been very, very delayed because of the high demand. But we are in constant touch with the government. So government is now decided to hire a transformer by the time they get the new transformer. So the line work is already on. At the same time, parallelly, our erection is also going on. So both will get completed by end of maybe mid of July or end of July max.
So, Ramesh sir, so then are we committing that EPI production, as in the press release it is told by second quarter it will start, it will happen?
That's what I said. It will start in second quarter of this financial year. So that is second quarter is maybe August, September, definitely it will start.
Sir, my third question is regarding last con call reference where you are told that bank loan tie-up with 2 banks were in final discussion. So working capital tie-up has been made with the financial partner?
No, that was not for working capital. That was for the packaging investment. As Ankit said, that 100 crores is required for packaging facility to come up. So today, EPI taxi facility is almost ready. That is where the power supply is required. And then what we are discussing with the banker is for the packaging facility.
So, sir, whether the discussions have finalized for the bank support?
Maybe Ankit, you can add what is the status of that?
So the discussions are still on. In principle, approval is there. There are certain conditions that we are fulfilling. Hopefully, post which we should be able to get that sanction. So it is all lined up, and we just await certain formalities to get completed. Post which we'll be able to avail the term loan facility.
Sir, my next question is, sir, we have seen that in between announcement of new technological things that you keep us updating. But all these orders are only one time, and if you are in a press release, you are told that a backlog of 17 crores is there. So what happened to that Navy order and nuclear power where you are supplied earlier? Whether any repeat orders have come from them? Any color on that?
So all of this are, I think your observation is correct that these are one-time order, but this is the beginning of a next follow-up. So, for example, on our defense side of it, the army side of it. We developed the product. It went through full testing, what army was looking for. That has been fully accepted, and the sample has been delivered and evaluated and accepted. And now we expect the multiple orders of same module that what army is planning over the next 5 years. And the same thing that evaluation takes time, reliability evaluation. So the silicon carbide devices that we provided for the Navy, the vendor is putting it together and going through the test evaluation part of it. One of the things that Mr. Ramesh mentioned about the 125 millimeter high power thyristor, that was an order from US. The most important part is that the application for that particular product is high voltage DC transmission, where Government of India over next 7 years are planning 2,500 megawatts of high voltage DC transmission. In India, they have no supplier to provide this valve, which is like a heart of the system, and our ability to get orders from international players will make our position much stronger, because we are made in India as well as self-reliant, and everything applies to us. And we are qualified from the international OEM.
Sir, are we planning any kind of some strategic investor or some stake sale, so that if you see our shareholding pattern, it is mostly some other than FIS, domestic institutions are not there. So that will add from a shareholder's perspective credibility if we have some domestic institutions or domestic investors. Anybody we are planning to induct or give any stake to any of these investors?
Ankit, can you answer this?
So currently we have a couple of funds who are there on the cap table, who are FPIs and FIIs. And we also have certain other institutional investors, though they may be lower than 1%, because of that their name does not feature on the shareholding pattern or the cap table. Coming to your point, we are in talks with certain strategic partners, as we had mentioned on the earlier conference earnings calls. And once there is something that is formed up and finalized, we'll undertake proper disclosures on the stock exchange and inform and disseminate the information to the public at large. Hope
Okay,
that
so my last question. Yeah, but sir, my only request as a long-term shareholder, if you can have somebody there in your major, at least a sizable stake, it adds credibility to the entire investment community, because they will, the assumption is they will do the proper due diligence and it will add more credibility. Anyways, I leave it to the management. Sir, my last question is, sir, regarding a last phone call you had mentioned about NSE listing, and any update on NSE listing?
I have said that in my report that we have clarified all their clarifications, and we are just waiting for their approval.
Okay, sir. Thank you.
Thank you. Next question is from the line of Pratik Giri from Shubhlab Research. Please go ahead.
Nirav, I would like to request you to just check the messages on the platform.
Sure, sir. Pratik? Pratik, I request you to unmute your line and proceed with your question. Due to no response, we move on to the next participant. Next question is from the line of Vijay individual investor. Please go ahead.
Hello. Good morning. I understand railway is major client of the company. What future potential do we see in terms of products and revenue from our existing facility at Halol?
Currently, the products which we are supplying to railways, maybe, with the change of technology in railways also, because see, what we are supplying to the locomotives, and for passenger locomotives, it may change because of the Vande Bharat coming into the picture. But there is a huge demand for the locomotives of freight corridor, because now the freight corridor has been made, and railways itself is making almost 1,500 locomotives every year. So the existing product will continue, and at the same time, since we have a good credibility and long-standing supplies with the railways, so we are also evaluating some of the new products now, because in the railways also the specifications are changing. So based on that specification, we are developing some more products for railways.
Okay, thank you, sir. Yes, sir.
Thank you.
Thank you. Participants, you may press star and one to ask a question. Next question is from the line of Pratik Giri from Shublab Research. Please go ahead.
Hi, Mr. Mehta. Hi, Rameshji. Greetings. Thank you for the opportunity. Yeah. Rameshji, my first question is to you. I'm really sorry I have joined the call very late. Probably I have missed a lot of it, big chunk of it. So apologies if there's any repetitive question from my side. Rameshji, I just wanted to get your opinion on assessment of our Halol facility. I'm sure for the past 3-4 months, you must have seen a lot of strength, a few weaknesses also here and there. So say in 2-3 years time, what incremental resources that Halol plant will be seeking to take the company from the current levels to at least 3x, 4x levels of revenues. I am asking this question from the context of newer products, probably incremental workforce and incremental approvals and compliances for the factory. That's the first question, Rameshji.
Yeah. See, as you rightly said, we are also working very hard on increasing the turnover of Halol to at least definitely not 4x, definitely at 2 to 3x in next 2 to 3 years time. The improvement of productivity, and I also said in my opening remarks that we are going to invest almost about 5 crores from our accruals in Halol plant for enhancing our capability as far as some of our products, because I also said in my opening remarks that 125 the order, 5 kV order which we have received, for which we need a lot of testing facility, as well as the defense orders which we have got. We have to upgrade our testing facility to meet the requirements. So we are continuously working on Halol also. It is not that just because of Odisha we are ignoring or not, it is a silicon, but definitely we are working on Halol also to see that Halol also gives us at least 2.5 to 3x in next 2 to 3 years time.
Understood, Rameshji. And do you think this 5 crore rupees investment in Halol plant will be enough to reach that number in next 2 to 3 years, Rameshji?
That is phased manner, because we also have a constraint of further expansion in Halol. For example, if we have to expand maybe for Halol kind of a product, the high power product, maybe we have to look at it, the existing facilities in Odisha, where we may have to ship some of the products there. But that is not current plan. But as you rightly said, going forward, when we reach, maybe when we cross 2x or 3x, then we will see what is the difficulty and how we have to overcome this. But currently, these 5 crores which I am talking about is majorly for upgrading and bringing some new equipment for the testing facilities, especially, and some process for 125 mm.
Got it. So this 5 crores will be more of a maintenance capex only to probably produce newer products which we have won recently.
It is not exactly maintenance. There are some equipment we have to, and some facility we have to build, like, testing facility which we have to build for defense.
Got it.
It's also for it's also for increasing throughput of the existing facilities, because giving a sample or 1 or 2 systems is okay, but when we get an order for 300 devices, we need to increase throughput.
Got it. No, in fact, Mr. Mehta, my second question was to you only. Thank you for chipping in. Mr. Mehta, so now we have, 2 workhorses, if I see, at least 2 opportunities to work on. One is Halol itself, because now Rameshji is there. Secondly, we have Odisha also. So at this juncture, capital allocation also becomes very crucial for us as an organization, because on one side, Odisha is a futuristic lever, whereas Halol is a low-hanging fruit. So I just wanted to get your opinion in the current resource pool which we have. How are you looking at, allocating them prudently among the 2?
I certainly keep on looking at capex requirements for Halol as well as Odisha, and we try to manage it. We cannot share, but there are ongoing activities going on with, as earlier questions, person asked a question in terms of the strategic investment and so forth. We have ongoing discussions going on, and that would, it takes time, but we are getting closer. It has been going on for some time as well. And so one thing we are looking definitely is balance it as best as we can. And especially the first balance would happen at the operating expense level. Once we start making happy with the product, at least the operating expense that Halol is right now subsidizing at Odisha will not be burdened. And second, the new products that we have, those are really not new. It's new product for us now because we see opportunities to be able to sell it. But we have been making those products. Even, for example, RIR was making this 125 millimeter thyristor for Silicon Power in US, that we were supplying it to US Army. So what we need is the investment that we are thinking right now is a little bit more automated furnaces and higher throughput furnaces and so forth. And fortunately, what happens is, as the state-of-the-art manufacturing in silicon goes to almost 300 millimeter or 12-inch product in terms of wafer and so forth, 4, 5, and 6 equipment become easily available, as well as they are more economical in terms of their availability.
Understood, Mr. Mehta. Mr. Mehta, my second question is on, I am forgetting the name of the company with which we have a JV for contract manufacturing using our technology. So any update there, Mr. Mehta? I'm sorry if it is a repeated question.
Yeah, we is a PASC. We continue to work with them on a 1200 volt and 1700 volts. We are also looking at another source out of Korea to go into 3.3 kV. So they have a little bit more reliability history in 3.3 kV, and that's what we need to go medium voltage as well. So we are looking at both in terms of try to have more than one contract manufacturer, one for lower power of the product, and the second the medium power.
Got it. So the previous order, that also will get manufactured very soon, or there's some more delay there? I understand we are looking for more manufacturers, but I'm talking about the previous order which we had given.
I think I think this, when you go to the foundry, they don't take any order until the process is totally streamlined and everything is ready. They don't do any development work whatsoever. So it's not an issue. We will provide, we give them the product orders as we see orders in our hands to ship.
Got it. Mr. Mehta, I have few more questions. I'll join the queue back.
Okay.
Thank you.
You can continue asking because we don't have any other questions right now. So maybe one or two more questions you can ask.
Got it. So, Rameshji, my other question again is a part of first question only. With the kind of experience you have in the industry, in the sector, I was just wondering, what are new products which we are planning to launch, which we can, backward, forward integrate into, or we can find adjacencies with. I understand you have already mentioned about the capacity constraint at Halol plant, but I'm sure if we'll have business, probably acquiring land and putting a new facility also won't be a challenge. So from that perspective, I am asking this question.
So here, the first focus is on to the two sectors where the new product development which we are thinking of, that is railways as well as defense, because the product configurations and the technology is being changed because these two sectors are upgrading their system also. So it is more of a cannibalizing some of the existing products, but at the same time, the value generation will be more than what it is today because it's the upgradation happening. So to that extent, we don't see any big constraint today in Halol manufacturing. But the another focus is also from the Halol, another focus is also on export. And I think I have seen at least for last 3 to 4 months, the export requirements is increasing much faster than Indian requirements. So I'm hopeful that reaching that 2.5-3x with the existing facility by upgrading every year, by investing maybe few crores here and there for equipment as well as upgrading the existing equipment, not going to be a big challenge. Maybe when we cross this 3x kind of a turnover, maybe there will be an issue of capacity constraint because I am also working very hard on increasing the productivity from the existing facility itself so that also can add to our revenue.
Got it. No, this is very judicious, Rameshji, because I understand, given our Halol plant, if you are trying to increase the productivity and, reach 3x of the current business, that itself is very judicious use of the current resources. Kudos to you for that. Rameshji, if you can share, a little more on apart from railway and defense, so because a lot of business we are seeing in HVDC and other power sector in the country. So are they low-hanging fruit for us at this point of time, or we will be entirely focusing on railway and defense only at this point of time?
We will be focusing various sectors. I'm not saying that we will be focusing only on these sectors because power sector is also there are a lot of infrastructure investment happening in power sector also. So we will be focusing on power sector also, but our presence in the power sector is not been as good as in railway and defense. So that is why it may take a bit of a time for getting approval, validation, and so many things in power sectors rather than in defense and the railway. So that is why I said that. And at the same time, there are a lot of low power products which we have. So we are also focusing a lot of OEMs for chargers, EV chargers, or the inverters. So all these OEMs we have started connecting with my previous contacts also and the existing contacts also, so that we can enhance our existing business also. And one more point to your previous question, which I forgot to add, that currently in Halol, we are working only one shift. So if wherever it is required, so we can increase the shift also. That's not going to be a big challenge as far as making 2 shift or 3 shift going forward.
Got it. No, this is very helpful, Rameshji. In fact, good luck to you, best wishes to you and the entire team. Just have one small suggestion. If we can share some photos of our Odisha plant, Ankit, probably this is for you. That will be very helpful. That will give us a lot of confidence on the progress made there.
Rather than that, I suggest why don't you plan to visit our plant so that you will be able to see live rather than the photos, how the things work.
No, certainly, Rameshji, we'll do that again, for sure. But just for, the comfort purpose for shareholder, I was saying that. But I totally get your point. I'll soon be there. Thanks a lot. Thank you, Mr. Mehta.
Thank you.
Thank you, Ji. Say hello to, okay. So,
Thank you very much.
Yeah.
A reminder to all the participants, you may press star and 1 to ask the question.
Already 12:04. If there is no question, can we wind up?
Yeah, we'll wind up.
Yes. As there are no further questions, I would now like to hand the conference over to Mr. Abhishek Sawant for closing comments.
Thank you, Neerav. And thank you to everyone who joined us today and participated in the discussion. We appreciate your questions and continued interest in RIR Power Electronics. As always, we remain committed to transparent communication and delivering long-term value to all our stakeholders. In closing, on behalf of the Board of Directors and Management, we thank you all for your participation in this call. RIR Power Electronics remains focused on operation excellence, financial prudence, and long-term value creation. Should you have any further questions or queries, please feel free to reach out to us. We look forward to engaging with you again with our future updates. Have a good day and stay safe. Thank you.
Thank you very much, everyone.
Thank you. Thank you, everyone.
Thank you very much. On behalf of Veritas Reputation PR Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.